You're listening to the IB4E Coaching Podcast.
Brought to you by IB4E Coaching, business coaching for executives, entrepreneurs, and small business professionals. Learn more at ib4e-coaching.com.
Hey, Coach Harlan here. Welcome back to the podcast. Hope you guys are having a phenomenal week. I'm having a great week, and I'm excited to introduce you to my guest, a returning guest. Please help me welcome David Safir. David Safir is a globally recognized expert in cash flow and profit maximization. He's the founder of Cash is Clear Learning Systems, educating and advising accountants and CFOs on cash flow and profit maximization strategies for their clients. His work has impacted hundreds of businesses with revenues from $1 million to $20 million in 40 countries. Through the Cash is Clear Complete Cash Flow Advisory Program and a mastermind groups, David teaches accountants how to grow their revenue with cash flow and profit growth advisory services. David is a contributor to CFO.com and a contributing author to CFO University. He has been quoted in hundreds of news stories, spoken to audiences in 27 countries on 6 continents, and appeared on dozens of podcasts and television interviews. And you just got done earlier today with an international teleconference or something, right?
That is right. Sponsored by CFO University, and it's FinX. And we had experts from all over the globe, and I talked about how cash flow can actually protect your business. And I was on with a forensic accountant, and I was on with somebody else who's doing reporting, an FP&E expert. And I gave a couple of examples where, boy, oh boy, you want to look at cash. You don't want to look at accounting for, well, giving bank loans, which we can talk about that later if you want to, but also projecting out, can you afford to take on new business? Forget the P&L. You can go bankrupt so quickly taking on big new contracts. And so I talked a little bit about that to protect your business. Look at cash.
Wow. That is a huge topic. That's awesome. Very cool. Well, David, it's good to have you back. You were on episode 94 back in 2021, way back then. And it's great to catch up with you. And I know you've been doing a lot of stuff. I'm anxious to go through it and learn more about your Cash is Clear learning system and some of the other things you're doing. So yeah, I've been looking forward to the conversation.
Me too. Me too.
All right. Well, tell you what, before we dive into all of that, I have 10 icebreaker questions that I ask every one of my guests, right? Listeners know these are the questions made famous on the TV show Inside the Actor's Studio, where the host James Lipton asks these same questions of his Hollywood guests from TV, film, and stage. And I figure if they're good enough for the Hollywood elite, they're certainly good enough for my guests. So David, if you're ready, 10 questions for you.
Fantastic. I am so ready for this.
All right. Question number 1. What is your favorite word?
Oh, it's still sublime. And I had enough money once when I was a kid to send a telegram, but only one word. So it's before email, before everything else. I had to send a telegram. And the address and my parents' name took up all but one word. And I realized, sublime. Now that was the telegram. That was it. And
Nice.
My father thought I was drunk, and I was only 16. And my mother, she goes, no, let's go look it up in the dictionary. And it explained that I was having a great time. So that word has really stuck around with me.
Sublime. Perfect. All right. What is your least favorite word?
The F word.
Yeah.
Yeah. I stopped swearing a long time ago, and I can distinctly remember the last time I used it. And it was a mistake. It was embarrassing. And I said, that's it. That never again. It's not, I don't care what the situation is. I'm just not going to use it.
Good job. Good job. All right. Question 3. What turns you on?
Same thing as 4 years ago, my wife. I just look at her. She's sitting right over there, and I'm looking at her. Hi, Lise. And it's great. We've been married for 38 years, and
Nice.
we still feel like we're teenagers. So I feel
Excellent.
I'm fortunate in that regard.
Excellent. Very cool. Good job. All right. Question 4. What turns you off?
Rude people who are intolerance more than anything else.
Yeah. A lot of that going around right now.
Unfortunately, but it's always been there. It
Yeah.
just felt
Oh,
like it was getting better.
yeah.
It felt like it was, but it was simmering under the surface,
Yep.
apparently.
Yep. Apparently. All right. Question 5. What sound or noise do you love?
I love music of all types. I have genre after genre after genre. I've got my computer over here. I've got iTunes, and I listen to music to pick me up, to calm me down. I just love music in general.
Very cool. And what sound or noise do you hate?
Um, I don't hate that many, but once I lived in Peru for a couple of years, and I remember this one morning there was a rooster outside. And I woke up and I said, Voy a matar este pollo, which I was just learning Spanish. That means I'm going to kill that chicken. Well, it ends up pollo. We all know pollo now, right? It's
Mhm.
chicken. Well, it's un gallina is a rooster in Spanish. So
Okay.
I learned a new word that morning.
Good job. All right. Question number 7. What is your favorite curse word?
I go for the biblical curse words. Damn, hell. There might be one or two other words. My kids would say, God, you're saying bad words. I'm like, no, it's in the Bible, so it's okay. Ass, that's the other one, right? There's
Yep.
at least three that I can get away with.
Yeah. Yeah. I tried to get away with that. My mom wouldn't hear it.
No, I didn't say anything about my mother. I just said with my kids.
Okay. Okay. Okay.
Okay.
Good.
All
Good.
right.
Good. All right. Question number 8. What profession other than your own would you like to attempt?
I when I was growing up, I wanted to be a doctor. I actually started out sort of pre-med biology and then decided I just didn't like memorizing all this stuff. But I've really woken up because of my own health and because of what happened during COVID to realize it is way more than the memorized facts and figures that they have. There's a real human element to it to help people get healthier, not just looking at us as machines, at least the good healthcare professionals. So I'll put that whole blanket healthcare professional on as what
Nice.
else I'd like to do.
Okay. Cool. What profession would you not like to do?
An accountant, which some people say, well, aren't you an accountant? No, I'm not an accountant. I'm a business person. Um, so accountants are good stuff. It's funny because I have friends who are accountants, I have friends who are lawyers, and both of them, they say it's not what I thought it was going to be. I've got friends who are doctors who say the same thing. And so we've got to really be careful what we wish for because you don't really know what you're getting yourself into. Quite frankly, I love what I'm doing. And so I don't think about that question very often.
Awesome. Very cool. Yeah, I know a lot of people that fought for their degree and now they don't use it, right?
Oh,
Because it was
right. They
not
don't.
what they
Yeah,
wanted. Yeah. Yeah.
absolutely.
Very cool. All right. David, final question. If heaven exists, what would you like to hear God say when you arrive at the pearly gates?
Well done. You help people, which is my goal. The work I'm doing today, it's to help small businesses stay in business. Do I want to make some money? Yes. Trying to get filthy rich? No. I just want to be able to earn a decent living. My goal is to spread knowledge that I've been able to acquire. And I feel like this has been a blessing that I've been able to do so many things in my career that I've accumulated this knowledge base. And I'm trying to help share it in a way that makes sense to business owners and the financial experts who support the business owners in a way that just doesn't seem to exist in the marketplace today. That's what I'm trying to do.
Yeah, well, you're doing it. You are helping people. Like you said, hundreds of businesses and continue with your YouTube channel and the cash is cleared system, everything. So, all right. Need to take a quick break, but when I come back, I want to talk about that. The cash is clear system, talk about some of the other things you've been doing, how you help people, and some of the things you find. What do they need help
Mhm.
with? And then at some point, we'll transition into courage and leadership. All right.
Thanks. Sounds good.
Okay. Folks, we will talk about all that and more right after this. So stick with us. And I'm back with my guest, David Safir. David, thanks again for coming back on the podcast. I've been looking forward to this conversation. Like I said, cash flow has been top of mind for me for a while. I'm working with a couple clients that are struggling in that area. So
Mhm.
we're working with them to try to get them, number one, to understand their numbers, because it's hard to have conversations if they don't even know what they're doing or how well they're doing, right? But
Right.
to know their numbers and to work through this process. So, reading about your cash is clear learning system. Um, why do you target accountants and CFOs? I mean, they of all people should know this stuff, couldn't they?
That's the common perception, is that accountants and CFOs should know everything about cash flow. And I've asked myself the same question, why don't they? And it's come down to a couple things. Number one is education. Number two is professional credentials. So let's talk about education first. I took accounting. I had to take management accounting 3 times. The first time I had to drop out. The second time I barely passed. The third time I finally got it. Hallelujah. And now I get it. And then I took cost accounting. Um, but they go deep, 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 and it's all historical. And there's principles. You have to learn the principles. You have to learn the matching principle, the conservative principle. The I can't keep track of them. It's been a long time, but they get indoctrinated. I will call it indoctrinated because they are principles and they are theories. It's not facts and it's not natural laws that we're talking about. So that's school. Well, who pays for schools and who hires from schools? And that is the large accounting firms and the large regional firms. And if you can't get into one of those, you go to a smaller firm that was started by probably somebody who was at one of these larger firms. And you become an auditor, you do tax, you do maybe it's just bookkeeping type accounting. But what is it all? And this is the real light bulb went off. I said, what the heck do these guys do when they take a CPA exam? And I looked and I said, oh, it's history. It's
Mhm.
all record keeping and record keeping accuracy. And they've put in there computer systems, but computer systems for what? It's for accuracy and for audit, right? And it's all about what happened in the past. Well, cash, you can't just look at the past. That's only part of the story. What you're really trying to do is understand what's going to happen going forward. You're trying to avoid going forward, or sorry, you're trying to avoid problems in the future. But when you're doing accounting work, it is accrual based accounting. Even QuickBooks, which is supposed to be for small businesses,
Right.
defaults to accrual based reports. And yet the IRS recognizes the fact you don't have to do accrual accounting until you hit $25 million in revenue.
Wow.
And so why are we forcing accrual-based accounting onto business owners? And it's confusing. I already
Yeah.
told you I had to take accounting 101 3 times before I finally understood it. And I hear about these accountants saying, well, so sorry, I'm getting carried away.
That's
So
okay.
why am I focusing on accounting? That accountants, that's why. I literally help deprogram them. And so I've actually, it's a 5-part structure. And the first two are mindset. And for an
Mhm.
accountant, and that's the same for bookkeepers, CPAs. In other countries, it would be called a chartered accountant, and you've got
Right.
management accountant. So there's different types, but also certified financial planners now I've got coming on board. And I've got a CFO from a publicly held company coming on board. And they're all having to undo and stop saying, wait a minute, it's not about accrual based accounting. It's about cash, and cash is real, it's tangible. But I can tell you that somebody will be in my program in 6 months or 9 months or a year later. We're talking about something, and the first response will be, well, there's some tax issues there. And I'll say, oh, time out, time out. What are we talking about today? And
Yeah.
they're, yeah, not tax. We're talking about cash.
Yep.
It's
Well,
tough.
and working with clients, they're confused a lot of times because their accountant or bookkeeper will say, you had a profit of
Mhm.
X, and
Oh,
they
yeah.
go, where? I don't see any profit. There's no profit in my bank, right? And it's hard to get them to understand that those are tax terms, right?
Mhm.
the accountants are working basically to report taxes to the government,
Right.
not really
Right.
helping you. And I learned this from you that the reporting that they should be looking at, because I tell all my clients they should be looking at certain reports, right? Profit loss, balance sheet,
Right.
cash flow statement. They need to do those in on a cash basis, not an accrual basis, to actually see a clear snapshot of really what's happening right now, not what's going to happen or what did happen, right?
Yeah. Well, but even there, if you do it on cash basis, there's certain things that are still hidden.
Mm,
The best example is, and this is a really hard concept, when somebody says, "Well, I just repaid a loan. I paid down $5,000 this month. Where is it on my P&L?" And you go, "Well, it's not there because it's not counted as an expense." What are you talking about? It's not an expense.
yeah.
It's $5,000. And it's like, well, let's put it this way. This is what helps the light bulb goes off. Was it revenue? And
Mm,
did you get taxed on it as revenue when you borrowed the money? Well, of course not. They get that. Of course not. It's not my money. And so then that they begrudgingly, and the same thing happened to me. I learned it the hard way. So, but the point is, even um, cash basis accounting reports can be misleading.
mm,
Um, if you use inventory, um,
right.
and you actually put products into inventory when you buy them in your accounting system, it won't show up as an expense. You just have to buy the stuff and then you have to put it in inventory separately. It'll show up as nothing. You can buy $1 million of inventory and it just doesn't show up on the P&L, even though you paid cash for it, even with cash basis accounting.
Wow. Wow. Well, yeah. Okay. So this is deep, and we're going to get into it. We're definitely going to get
Okay.
into it. So let's back up a little bit. Tell us a little bit about your background. I mean, you've had a pretty incredible career, Latin America, right?
Hmm.
Working for
Yep.
Kodak and Omega. Tell us a little bit about your background.
Well, so I was really fortunate. I've worked for some really large companies. I studied Spanish in high school, could barely speak a word of it, but I lived outside the country in Peru for about a year and a half, picked up words like gallina instead of pollo for rooster,
Yep.
right? So that helps. And then I went to school for international management, and I ended up being able to work with Latin America. And I was able to visit lots of countries and work with lots of companies. But I also got to work with different industries. And what I got to do was I was a general manager of a publicly held company. So I didn't worry about cash at all. What I worried about was P&L. But I learned, okay, where are the margins on this? Where are high profit margins? What are the low profit margins? Let's cut the low profit margin product from our portfolio. We'll have lower revenue, but our profit will go up. And sure enough, I got to play around with it. 6 months later, our profit was up, even though our revenue went down a little bit. And so I was really fortunate and got a good mentor, Joel Holtzman. Joel, I don't know if you're listening to this. I'm going to tell you about it. You should listen. But he took a chance on me and he knew me from a couple of other companies and said, go ahead. And I was able to restructure a division of Kodak. And we went from years of losses to a turnaround break even in a year. And it took us about a year and a half to actually make money. And that was a
Nice.
lot of fun, learned a ton of stuff. And then I got recruited to another company to start up a Latin America division. Was a publicly held company, but it was the same thing: P&L, sales, marketing, margins, controlling expenses, hit the bottom line.
Hmm.
That was before I didn't have to worry about cash. It wasn't until I had friends who say, David, could you help me with my company? I said, sure, let's go take a look. And I took the big company um, strategies and
Yeah.
boiled it down to understandable for a small business owner. I've got 226 documented strategies for managing cash flow and profit. And
Wow.
the majority of those I learned at large companies. So this is scalable. What we're talking about today doesn't matter if you've got a super small solopreneur or if you're a $100 million company or bigger, because I was working with multi-billion-dollar
Mhm.
companies. And so that's how I started to do consulting work, was people were just asking me, And just before you and I met last time, I said, I want to specialize in something. And I realized the common thread was everybody had cash flow issues.
Mhm.
Now, they didn't call it cash flow. They had sales issues. They had marketing issues. They had product issues. They had expense management issues. But that's what it all boiled down to. And that's where I decided that's what I'm going to specialize in. And there's a real need in the marketplace for it, for people like you who are willing to say, I'm going to step up and learn about this stuff and help my clients.
Nice. Very cool. We had just reading through your background. President and general manager of Kodak Latin America, president of iOmega Latin America. You worked with Morgan Stanley and Dell, a lot of big names. The thing that got me was at iOmega, you grew the revenue 404% in 5 years
Mhm.
and profits by 181%. That's incredible. Those numbers are just mind-boggling, when you think about it. But that's what, like you said, kind of got you into this mindset of number one, finding out what's happening, turning it around, and going on. Of those 290 some odd strategies you have, are they all applicable, like I said, to small businesses? They can be put into small businesses, or are there some things that might be a little bit different on a smaller scale?
So I actually have a category to filter out if you just want to look at solopreneurs.
Okay.
Okay. And so they're not all applicable to solopreneurs because some of them have, for example, to do with human resources. Those
Mhm.
all get wiped out. That's a good example.
Okay.
However, of the remaining, they are all applicable to small businesses if you use inventory. If you don't have inventory, then you can't use those strategies. If you don't have employees, you can't use those strategies. But none of them are can't be used by small businesses.
Hmm. Very cool. Yeah, because I work with small to mid-sized companies, right?
Yeah,
Um, 5, 10 million, like tops for them. Um,
right.
but after reading, what you're doing and looking at some of your YouTube videos and everything like that, I mean, cash flow impacts everybody from
Hmm.
the little mom and pop store all the way up to the big guys. Um, what is it that these companies and businesses struggle with the most? What's the one thing that they get wrong about cash flow?
Well, you've already said it. They equate the profit and loss statement that they get from their accountant to the health of the company. And it can go both ways. You can have what shows up as a very profitable P&L and pay a lot of taxes and not have any cash in the bank.
Mhm.
But you can also have tremendous losses and have a lot of cash. And there's one real easy industry that points that one out: real estate.
Yeah.
The entire goal of real estate investing is to have good cash flow and losses because of depreciation on the buildings. As a matter of fact, you do that. One of the strategies is accelerated depreciation. Now, if you don't own a building, you can't use the strategy. But
Right.
a really small business, one person can own a building, put themselves in the corner, and rent out the rest of it. So it's feasible.
Right.
But the whole point is to lose money. So it offsets. Matter of fact, and there's another strategy. I don't know that I call this one out because I don't get into taxes. None of these are directly involved with taxes,
Mm.
um, because there's just too many tax strategies. But that you're successful and you quote unquote shelter your profits by buying real estate because it generates a loss. So, but it's
Interesting.
deceptive.
Yeah.
What these small business owners really need to know is how much cash do I have in the bank? Not
Mhm.
today. I just read today there's a bank that is really focuses on small businesses and profitability, but they do studies. And that is like 91, 95. That's what it was. 95% of business owners manage their cash flow by looking at how much money is in the bank account.
Yeah. Yeah.
And I was surprised it was that high. I knew it was high. But we hear about all the time, somebody goes out and buys a car, not like a $20,000 used car. They buy a 60, 70, $80,000 or a truck, right? Big pickup trucks are the other ones, sports cars and pickup trucks, because they've got the money in the bank and they don't realize they're going to get hit with a tax bill on April 14th this year that they need that $50,000 or $100,000. And so and it's because they see they've made a lot of money on their P&L. $1 million, they've got $100,000. Well, we're floating, it's great. Let's just keep rolling along.
Yeah. I actually had a former client that was his thing. He went out and bought a brand new truck. It's like, why did you do that? Well, I had money in the bank. Have you made payroll yet? Well, we can do a short-term loan to cover payroll. It's like, I don't understand. I'm not a mathematician. I'm not an accountant. I don't get it. I don't understand that thinking.
Well,
Wow.
and this is where to try to do cash flow models that project.
Mm-hmm.
And one of the things I learned the hard way from a client is he didn't do numbers well. Sometimes you need to do graphs
Mm-hmm.
to show. You see this? This is red. This is green. Green is good. This is zero. Above zero is good. Below zero is bad. Look at your projection. It's going below zero. We got to get it above zero. And so, but they're not used to it. They're not used to forward-looking projections. What are they used to looking at? History.
Backward history. Yeah.
Best case scenario, history. No, best case scenarios are looking at today's bank account.
Yeah.
The present, and most of the time they're looking at the past.
Right. Yeah. So, like we talked before, the profit and loss, the balance sheet, cash flow statement, those are and AR and AP, those are the reports we're told to look at to kind of gauge the health and the efficiency in the business. If that's not what we should be looking at, what should we look for?
There's a separate model that's standard. It's called the 13-week cash flow forecast. That is standard in the banking industry. Now, we talked about this conference I was in earlier today, and I gave the example of it's not the loan originators who look for a forward-looking projection for cash. They are looking at a forward-looking P&L, which is just as made up or worse than the backward-looking, because now you're projecting, right? And so there's not 100% confidence in those numbers. But there's another department of the bank called special assets. Special assets takes care of problem loans. What do they want to see? They want to see 13-week cash flow models. Why? Because that's the difference between able to make a payment, staying in business or not, is seeing if you're going to have cash.
Yeah.
So it's a standard, well-known model that most people don't use. Why? Because it's not as automatic as just doing double entry bookkeeping, which is all sorts of software everywhere. And you've got to be careful because most of the companies who have software that does cash flow projections are really doing P&L projections. And I've tried talking to a couple of them about it, and just like it falls on deaf ears. And so a lot of the times I've got friends that do this type of stuff. We use spreadsheets, but we figure out how to download data and be able to do reasonable cash flow projections, and you get good at it. I'm not talking 2 or 3 months out, you really know dialed in, but a week or two out, yeah, you're really pretty dialed in about how much you're going to get. But here's the good part. 13 weeks, it's 3 months. 3 months is enough to see problems coming and to make sound decisions and not panicking when you realize the car you bought last week is where your payroll for this week went because you didn't think about it. That same client, if they had this model, it's easy. You plug in the $100,000 and go, oops, we're negative. Okay. Well, maybe we take out a $50,000 car loan for the car and pay it off over a year, whatever it is, but you can actually plan the cash spending when you start doing this type of modeling.
Yeah. Yeah. I've got one client that he's at that point now where it's like they've got so much work they have to hire, and they're looking, do we have enough cash to hire? Do we have enough cash to, a new vehicle for that person coming in? They want to expand their current operations to a bigger building and everything. All these things, you have to know where you are. You have to know what's coming at you, dollar wise as well as the business wise. And when you're looking at these old reports or reports that are showing history, you can't make those good decisions.
Right. But if they're already using a 13-week cash flow model, okay, that's great. Let's do a sub report that says this is how much is our new revenue, just looking at the new revenue stream and the new cost for the revenue stream. And unfortunately, this is one of the paradoxes that just not obvious. You can go out of business faster, bringing on chunks of new business, not slow growth, not 5 or 10% growth a year. But you're at $1 million, you bring on a new $500,000 contract where it's a jump. You can go out of business faster than having slow growth or sorry, negative growth. Why? Because you're hiring people, you're buying capital equipment, and then how long are they on payroll before the revenue comes in? Wow, no, I'm not going to use revenue. That's an accounting term. See, even I do it.
Yeah, yeah.
Before the cash comes in the door to pay for these folks, the new people, the new equipment, the new uniforms, the new computers, the new telephone lines, all the expenses that go in. But you know what? Your client, once you work with them, figure out this model, here's a team, then you've got it for next time. You just update the cost, and here's the cost to a new team and a new team. I worked with one client. He did
Nice.
long-term construction projects. We had to project out 5 years.
Wow.
And when we finished working together, he said, David, I wish I had talked to you years ago because I could have grown faster. One of the few business owners who understood that you can grow too fast, and he didn't know how to project it. So he was smart. He conserved his company, and then he was able to grow a lot because he could project the costs and the growth and the revenue. Sorry, cash coming in.
Nice. Yeah, because I know my clients, they struggle, commercial contractors, and so they
Mhm.
struggle a lot because they're on a pay when get pay when paid contract,
Yes.
right? They work for a general contractor, they do the work, they get done, they submit their invoice. It's like, well, we don't pay you until we get paid, and that could be months down the line if they get paid at all. Maybe they've done something that the ultimate customer decides they don't want, so they're withholding payment. That impacts them. So it's hard. How do you get around that when you're doing these projections? How do you know what's actually going to be coming in during that time?
Well, so there's two things. Number one, I'll also mention or ask you, do they have retention, which is when the project is done, they get the last 5 or 10%? Have you ever heard of that?
There's some contracts where they're getting milestone payments or progress payments. But there are other
Right.
ones where it's like, no, you come in, do this job, it's maybe small, 10, 20
Mhm.
grand. When
Yeah.
you're done, submit the invoice and we'll pay you when we get our pay. And that could be months and
Right.
months and months down the line. They've already
Okay.
invested their materials, they've invested their employees' time, right? The labor charges, and they have
Right.
to wait. Yeah.
So, all right. Um, so I brought up the topic, so I'll finish that one up. Retention is when you've got the contract that says until this whole contract is done, you don't get the last 5 or 10% in case you screwed up something, or you have to
Mhm.
come back and do some more stuff. That's one of the reasons we had to go out 5 years because they were involved
Oh,
with these massive infrastructure projects. So how do you deal with what you just described? You do your best. There's two things that usually happen. Number one is um, you assume what the contract is going to be is what the contract's going to be. It's 30 days, or you've got to have a good relationship with that general contractor. Great, we did our bit. When is this part of the project supposed to be done and signed off on so you guys get paid? You've got to have that kind of communications. And they say, great, it's in 45 days. So you plug it in. You have to manually plug in the revenue.
okay.
But then there's nothing you can do about it except for maintain communication. Is it still 45 days? And if you got 3 or 4 projects with these folks, you keep track of the 3 or 4 projects. It's not simple. No, it is simple, but it's not necessarily easy.
Easy, right.
The technical stuff is really pretty easy. Setting up the spreadsheet, that's easy. The hard skills are easy. The soft skills are hard. And the soft skills are communications and systems with your your clients in that case.
Yeah.
And then the other thing is, and I've dealt with this with clients, again, construction. Wow, what a world of fun. Different client, they had 0% accuracy on forecasting revenue. And I try to have a wake-up call and say, you've got to stop believing your customers. Stop listening to what's coming out of their mouths and start looking at what really is going on. They pay you in 90 days, period. Don't listen to them.
Yeah.
And so that's the other thing is wake up to reality. That's why you need good bookkeeping. Harlan, absolutely. I am absolutely for good bookkeeping. I'm up for good, which is accounting as well. Good chart of accounts tells you a story. It's just not relying upon the reports that are standard in the accounting industry. That's what I've got a challenge with on helping small businesses understand.
And probably finding an accountant or CPA that is used to working with small businesses so they can help them in that area, right?
They're very hard to find. This is why I'm teaching. This is why people are joining my program with Cash is Clear Learning Systems. It's so they can understand and how to do cash flow advisory, cash flow and profit advisory, and be able to explain this stuff and be able to say, yes, we do need to look at accounting because you got to pay your taxes. You said it before I did. I used to do my taxes, my bookkeeping once a year because I only used it for taxes. I did everything on a cash flow system. We're now trying to grow a larger structured company. And so now we're doing bookkeeping on a regular basis, monthly, quarterly, etc., because I've got goals in mind. It is not to run my company.
Hmm. And now you've got me thinking because I work with my clients and we do our quarterly review. How have we done this quarter? What's on for next quarter? But we're looking at the reports, profit loss, balance sheet. I need to start looking at that 13-week cash flow. So I think that'll help give them a little bit clearer picture of where they are and where they want to be.
The closest thing that you can do from a reporting standpoint, it's hard to even say it because it's such a hard report to understand, and that's the statement of cash flows.
Mhm.
I have to relearn it every time I look at it. It's like, okay, which one's that one? The inventory's up. So that means, oh yeah, we spent cash. Oh no, the inventory's down. But if you use that, and I'm just going to use QuickBooks as an example because that's what I'm used to,
Yeah.
and you run it by quarter, not by quarter, by and not even by month, because that's only 3 touch points. Run it by week. You can select run it by week. And so you've got week after week after week after week, you will see balances. You will see what's going on and you will see where the cash is coming from, where it's going. And you'll see really low bank statements and you'll see really high inventories and things that you can see that these things, if they're going like this, wild ups and downs during the course of a quarter, week to week, then they've got cash flow challenges. Almost guarantee you, if it's not I don't mean like it's flat, but
Right.
but what you would call controlled and not just random numbers. That's a way to tell without doing a full blown cash flow spreadsheet.
Wow. Wow. I'm learning all this stuff, buddy. I mean, there's a lot to this. And I know on your website you offer a download, a PDF. Is it your ebook, right? That goes through different strategies and stuff. Learned a lot from that. That is a great document.
Good. That's
Yeah.
24 of the 226.
Wow.
Yeah, it's pretty fun and it's exciting. I'm glad you grabbed it. And
Absolutely. No, it's because I like,
yeah,
this one is easy, but it takes some time. This one is
mhm,
hard and takes a lot of time. So people can look at it and say, okay, which strategy do we think we can actually put into place? And how long is it going to take and things like that. So yeah, I think it's a great tool.
good. I'm glad. I hope everybody downloads it. Is it going to be in the notes?
I will put a link. Absolutely. I will put a link to
Okay,
it in
good.
here. And your YouTube channel.
Hmm.
I went out and looked at some of your YouTube channel things today, and I know um, you were talking about some of the strategies that we all learned, and we just got done talking about it. The strategies that you hear all over from everybody, you know, uh, increase your revenue, right? Decrease your AR, get people to pay you faster. Go out and try to renegotiate your contracts. Yeah, that makes sense, but it's not always that easy to do, right?
Mm-hmm.
Are there things that people can do in their small businesses aside from looking at their cash flow? Is there anything else that they can do to start impacting their
You
cash
know,
flow?
that's a really great question. One of the things I noticed when I was doing the research saying what's out there in the marketplace back in 2020 that talks about cash flow, I'm going, wait a minute, all these things, there's like 15 to 20 things that they keep recirculating,
Mhm.
with the exception of the last one. And then that's whoever the author works for. They're trying to sell you that's a service, that's software, because that'll fix all of your cash flow problems. Okay,
Sure.
so you got to be really careful when you read cash flow articles. So the big issue is so much of the expert advice is outside of your control. Hey Harlan, you owe me $30,000. Do me a favor, would you? Can you pay me? If I'll discount it 10% if you pay me tomorrow. And so I can make the phone call, I can offer the discount, but you might say, David, I'd love to, but I've got this other guy who owes me $100,000. Until he pays me, I can't pay you. It's outside of my control whether or not you pay me. You mentioned a couple of others that are just outside of our control. But so what do? You look for things that are within your control. And we're actually doing a session in 2 weeks. No, next week, a week from today, about the accounts receivable strategies. Yes, those are two perfectly valid strategies, but they're outside your control. What do you control? Number one reason people don't pay their bill is because they combination of they don't know they got it in their email. Number two, it's wrong, and they put in, sort of like, okay, I've got to deal with this. Or number three, well, those are the two biggies. It's more of a communications issue. So your accounts receivable starts before it even goes out the door. Did you do it right? Oh, did you send it out the day that you can? Right? If you're
Yeah.
delaying for a month, and you send it out late, a month late, and you say, well, you've got 30 days, tomorrow's day 31. It's not really fair that you're asking them to pay immediately. So did you do it on time? Did you do it right? Did you put in a
Yeah.
courtesy call and or a an email? Calls are better, text messages.
Sure.
They are your clients. Treat them like clients and say, listen, I just want to make sure you got the invoice. Is everything okay? Did you see anything that was wrong? Let me fix it for you if you did. And then you can do a series of additional phone calls if you want to. Um, the other thing you could do is proactively say, listen, you're on 2% net 10. I would love to give you that 2% discount if you pay me within 10 days. Would you like to do that? So that's within your control, is offering those things. Here's some more things that are inside your control. I have switched over to a billing system called Anchor. And Anchor was designed for accountants and financial professionals. And so now my invoice goes out automatically and they automatically bills, and it hits a credit card or a bank account. My client chooses which way. And all I'm doing is getting messages. Like I missed the message this week for one of my clients, but I went in and said, yep, it's already in the bank account. That has been life changing. And
Wow.
I know the CEO at Anchor, and he said, and he explained this just changes everything. And it's true. It took me a while to get the first client up and running. Now it takes 10 minutes to get the client up and running on the system. And then it takes 0 minutes to collect every month.
Yeah.
Now, and the client, and that just becomes part of my basic terms and conditions. And I've made the decision, talk about ideal client profiles. If you don't want to do that, you're not my ideal client. I am not going to go chasing money anymore. Now, I made this, my first transition was I billed at the beginning of the month for the following month's services, but I still was doing the work to put the bills in the mail saying, hey, getting it back, etc. So those are some of the things that clients can do proactively and make decisions to do them. Some of them are easy, like you said. Some of them are hard. Some of them take more time. Some of them take less time. Some are free, quote unquote. Your time is never free, but it's not going to cost you cash out of pocket. And some of them cost a little bit of money.
Sure. And so I'm glad you brought a lot of that up, because it is things that are happening in-house that could potentially, right, push that receipt of money out. One of the clients I was working with a few years back, their AR was through the roof. And so we started looking at exactly what was going on with it. And my background is, process mapping and process reengineering. So we
Mm-hmm.
got up on the whiteboard and draw out a process map. What happens now? What happens next? What happens next? And the work that their guys were doing out in the field, they had to complete the job, and everything, all their notes, all their POs had to be in there, pictures before and after, the signature from the client. All that would go into the system, and then it would be that project would be closed within their system, and then the invoice would be generated and sent out. Well, the guys on the field were taking over a week to complete their stuff, even though the job was done and they were off to something else. It took them almost a week to finish the job on their side and then get it in house. And then it took almost a week for this person to close out everything before they'd send out an invoice. And so they're already, 2-3 weeks out. And then the net 30 pay term
Right.
starts. And then they work through some customer portals where they have to enter all the information in on a portal and submit the invoice that way. Well, if they don't categorize something the right way, if they leave a checkbox undone, it just sits there, hovers. You may not know, and you're thinking that they've received it. They weren't following up to find out what was happening. It was just a mess. Once we got our internal processes cleaned up and streamlined everything, where things out in the field were being done within 3 days, the invoice was going out within another 3 days. When we contained all of that, the money started coming in, and their ARs dropped. Everything started happening and stuff. But it's getting those processes in place and sticking to the process. And like I said,
Yeah.
if it's follow up with a phone call, follow up with an email, follow up with, whatever it happens to be, but keep on them. If that's your process, follow the process.
Harlan, that's an example of two things. One is mindset. The mindset was, well, yeah, I know I just finished a job. This is the field guys, but I've got more work I've got to do. I'll do this when I have downtime. We're not realizing they're not getting, well, because they didn't have to worry about their paycheck,
Right.
right? So that's a mindset externally, with the HR, but you've got internal people. So the other biggie is mentoring. What you're doing is mentoring the business owner, and then the business owner is mentoring internally. This is what's going on. I'm guessing that you guys actually explain the direct impact the field guys are having on the company's financial health and helping them be part of the team. So those are the two of the steps. The other ones are modeling, managing, and maximizing. Those three are easy. The soft skills are hard. Did I already say this today? I said it earlier, I think. But the soft skills are hard and the hard skills are easy.
Yeah.
Right? Your mapping is sort of people consider it sort of a soft skill.
Mhm.
Because it's not a hard science doing what you're doing. It takes time and experience to learn how to do this type. And it's the questions you asked, not the answers that you had that got that map there, right?
Yeah. Yep.
Yeah.
Wow. All right. Tell me a little bit more about your Cash is Clear programs. How do they
Well,
work?
yeah, it works. It's fairly easy. I've got two basic programs for anybody associated, well, literally anybody who wants to learn this stuff. I've yet to have somebody say, great, I'm a business owner. I want to learn how to do all this detail. Matter of fact, that's why I shifted. The last time I was on the show, I was gearing up to help business owners.
Mm-hmm.
Nobody came around even talking to me. It was all accountants and bookkeepers. And so, great, I'm going to shift. So, anybody who has anything to do with, I've got a bookkeeper, I've got different types of accountants, I've got an inventory specialist who's joined my program because she learned how to turn it from units to cash and show people how much cash she was pulling out of inventory. And so we've got this variety, fractional CFOs, and there's two basic programs. One is a program you come in, there's online coursework, it's virtual. It's multimodal because some of it's downloads. The soft skills are workbooks that you do with pen and paper, or you can do it on a PDF on the computer, but they're meant for your clients, the soft skills for your clients to do. So to do that. But then we have a mastermind twice a week to talk about different topics. And I never run out of topics. Um, the and then we also have an accelerated group that wants to do advanced certification. I am basically trying to do direct transfer knowledge so that they could be teaching this. I'm trying to train the trainers so they know how to do a blood wall, which is a whole nother topic, which shows you how to show a business owner how much cash they're bleeding from the company.
Yes.
So they know
Nice.
how to run a mastermind. So I know that they know how to do a cash flow spreadsheet. And they've got to do some time and document what they've done with their clients. So that's a faster, accelerated program that I'm involved with. And then I'm going to go out on a limb and tell you about a third thing we're doing.
Okay.
I pointed to my wife. She's in charge of this. We are putting together the Unconventional Cash Flow Conference.
Okay.
It's going to be small. We're only going to be allowing about 10 people. If we really get the demand, we'll allow a few more, but we need to contain it this first year. It's going to be at an all-inclusive resort outside the United States in a nice climate. And we will have half a day on learning about cash flow and profitability, about growing your business, and about taking care of yourself. Those three topics, and people will be invited to bring their partners, their spouses. And so it's this combination of learn and take some time for yourself to really think about what you want to do. So that will be coming. It'll either be the fall of 2025 or before tax season or after tax season 2026.
Nice. Wow, that sounds awesome. That sounds great.
I'll let you know when we've got details, more
Definitely.
details.
Yeah,
Okay.
definitely. That sounds awesome. So, I mean, what's next for you? What's on the horizon aside from this, which I think is going to be an amazing package? What else do you have going on? Any more speaking engagements?
I do about let's just call it four more or less podcasts every month.
Nice.
There is a book in my future. Don't know
Okay.
when, but this has got to be told. That's number one. Number two, there's a podcast in my future. Hopefully you didn't notice that the YouTube channel hasn't been added to for a while. I've got to resurrect that.
I was going to ask.
Um,
Okay.
yeah, and so what's going on is that I spread myself too thin.
Hmm.
And I'm working on the maximizer to make it easier to use. I will probably release a version, not all 226 and not all the filters and not all the usability, but a free version so people can use it for themselves. My goal is to help millions of companies. I can't do it by keeping everything close to the vest. So the maximizer sometime this year, there'll be a free version with probably about give or take 100 strategies and a bunch of filters. So that's going to be coming out. I'm working on a book that's a workbook of all my mindset exercises because
Cool.
that's so critical. And that's a book that I've actually sort of written because all the exercises are one at a time in my coursework.
Yeah.
And that's usable. So I've got an endless supply of things that I want to do in my brain.
Awesome.
So I'm sort of glad you asked, but on the other hand, I don't even like to think about it because it gets overwhelming. But it's fun. The good news is it's fun
You enjoyed it.
for me. For me.
No, very good. You're enjoying it and you're helping a lot of people. Like I said, I found all your stuff so impactful, especially when I'm working with my clients, they're asking questions and I'm going with the old school knowledge. Here's how we do this. And now you've got me rethinking how we're going to approach this. So yeah, very cool. Good
Good.
stuff. Well, David, thank you so much for agreeing to be back when your book is published. We'll have you back on when you have your program out there and stuff. We'll have you back on, see how that's going. And yeah, I wish you all the best, man.
Thank you very much, Harlan. It's been a real pleasure. Let's not make it 4 years if that's okay.
Oh, no, absolutely. No, we'll be in touch. Absolutely. I'm
Okay.
going to be asking you questions and counsel for you. And maybe I'll even have you talk to some of my clients. We'll get them on and have a webinar or something like that where we can talk about this. Because I think, like I said, cash flow impacts everybody. It doesn't matter what business you're in. It doesn't matter how big your business is or how small, unless you're a one-off. Um, and it's holding people back. I think if they really get this under control, they will be able to grow strategically, planned growth, not
Mhm.
just the wild, harebrained schemes that they hatch. So yeah, very good. All right.
Absolutely.
Well, again, David, thank you so much. Listeners, hope you guys were taking a lot of notes. I will have all the links down in the show notes. I'm going to link to David's website. I'm going to link to the YouTube um, channel that you have because you've got some great videos out there. I'll put a link to the PDF, the ebook that you have online, so they can download
Great.
that because that's been a big help. And yeah, any other things you suggest, we'll have those down in the show notes. All right.
Thank you. I
All
appreciate it,
right.
Harlan.
Cool. All right, David, thanks. And listeners, make sure you share this with your family, friends, colleagues, any business owners you know that are struggling with cash flow. Point them to this podcast. Let them listen to this and pick up some tips. And yeah, share it wherever you can. And stick around because there's always more coming. And that's it for me, Coach Harlan, saying so long for now.